I think this is a perfect example and highlight of real estate being a get rich for sure plan, not a get rich quick. It's really about time in the market and not trying to time the market.
We bought it at 1.35 million, 11 units, 9 townhomes and 1 duplex. We closed at 1.35 million. So we raised 450,000. When you're going for your first deal, you're going to give a little bit more. Rents increase for about $5,000. If you don't trust yourself, go get 3 quotes. I like to hold it for at least 5 years and then see what happens, see where the market takes you.
What is up, YouTube? Matt McKeever here, and we've got a really exciting part 2 video with Kasey Wong. So if you guys remember, in part 1, Kasey broke down for us the exact numbers behind a successful real estate transaction that he's looking at exiting 5 years after buying it. Well, in today's video, we really just discuss how do you go about building those relationships with potential partners? How do you break into those larger multifamily deals when you don't necessarily have a lot of your own money? Again, this is a masterclass, in my opinion, of just understanding the real estate investor's perspective and how you get to the level of game that Kasey's currently at. If you guys are enjoying these videos with Kasey, what I need you to do is smash that like button, hit the subscribe button if you're new to my channel, and remember, as always, sharing is caring. If you guys want to see more videos of Kasey, the best way you can get those videos to be made, make my shit go viral. When my shit goes viral, I want to make more similar shit. So if you guys share Kasey's shit everywhere, I promise we'll make a lot more Kasey shit. All right, this is not the intro you guys were expecting, but let's just dive into part 2 with Kasey and the masterclass on building partnerships.
Right. Yeah, and I'd love to build upon that because I think there's something that you talked about at the start or near the start of this video that some of the newer investors might gloss over or underestimate the importance. But when you're new to this game, and especially when you don't necessarily have all the money to execute on a deal yourself, I think it really is important that you over deliver value to your first couple investors, because if you treat them right and build the right relationship with them, they eventually become some of your most vocal champions, right? Because if they're a perfect money investor for you, odds are they probably hang out with other potential money investors, right? A lot of people naturally, like that guy that you cut a check for $250,000 to, who originally just gave you $100,000. He wants to brag to his friends about how he made a bunch of money and he was smart for investing with Kasey. And then naturally what they want to do is invest with Kasey as well.
That's right. That's right. So take care of your investors. Exactly what you just said. So here's a little way of, I just like to break it down to finding money, raising capital. Your group of people, your family and friends will be your core group. At the beginning, you have no experience in real estate. Okay. So your family and friends will probably give you guys, or not give, but invest with you with little background experience. So hear me out here. Your parents, okay, your uncle, your aunt, your cousin, or this distant relative that comes along and they have whatever, $100,000, $200 million. Okay, you already has shown type of experience. Maybe you went to school, you worked hard. Maybe you're in the trades. You're a plumber. You're a welder. You're an accountant. You're a CA. Things like that. I'm a property manager. You've shown them that experience. You've given them something that, okay, well, I feel comfortable with you because you're a property manager and your wife is a CA. All right. You can run the numbers so you can operate. All right. You don't have that experience that you've held this 11 unit building before, but you have that experience because you've done the work. I walk them through it. I show them what I've done before. Now they'll invest with you. Okay. So they're blindly throwing that money. Mind you, these investors are not very sophisticated. Okay. That group, I'll call it that core group of family and friends, not very sophisticated. You don't have to show them everything. But when you grow that, let's say to the bigger circle, so let me expand that. That's number one. That's step one. Step two is your association with business people outside of your family. Okay. This could be workplace people. These could be other accountants. It could be doctors, lawyers. It could be your childhood's classmates' parents. Okay. My kids go to private school. Actually, none of these sort of acquaintances that we know have invested with us, right? But I met who is it? The Cap REIT, the founding the son. He goes to his son goes to UCC as well. Okay, so very wealthy family. These are the people that you associate with. Now, when you associate with these people now, you have to show a little bit more. You're gonna have to show them what you have done, your experience, you know how. You're gonna have to walk through the buildings with them. Okay, so that's the next sort of stage, that next circle. I'll call it circle 2. Okay, that's the next raise of money. Number 3 would be private equity funds or things like that, or public money. People actually approached us and they said that, hey, Kasey, we have all the money that you want, all the money that you need. Go and do what you do, but I want 80% of it. Okay, their money gets paid back first, and then you get 80-20 split. Okay, so I was thinking like, damn, that's all the money. I just have to go and operate. But to be honest with you, at 80-20, and they have a high waterfall, I have to always meet those returns every single year. That's like getting another job, right? That's like working for somebody else. I don't want to do that. Right?
Yeah.
It's almost like coaching, right?
Yeah, for sure. It definitely creates a new sense of obligation to someone other than yourself. I'm sure a few audience members might have a question. Do you mind just elaborating on what you mean when you say waterfall?
Yeah, it's almost like there's a return that you have to reach. I don't know the exact terms, like each one will be different.
But yeah, like it's some sort of requirement or cliff that you guys have to achieve before you get paid.
That's right. So let's just say the return was for this year, the first year, it's 18% rate of return. Okay. So overall, it has to be 18%. The next year, if I don't reach 18%, okay, then I don't get that bump up in pay. So I have to reach again another 18%. Okay. Next, the following year, I reach 22%. Now my waterfall has gone up to 22%. I have to reach more than 22% to get that increase. The next year it's 20. I reached 24%. I got mine. Now I have to get 24%. Okay. So there's a certain. I think that's what he was referring to.
Yeah.
There's every clause will be different, but he told me that's the way he wants to work. There's 18. Like it goes up every time that if I've reached a certain goal, next year I would have to. So let's say the goal was only 10%. I broke it at 12%. The following year, I have to go up at 12, higher than 12%. I can't do 10% anymore. I get 12%, then 18%, then 20. So it's always higher and higher. So it comes to the point where, do I really want that? Right? That threshold, that watermark. I think it's waterfall or watermark. Watermark. Is it watermark or something? I don't know.
Yeah, so I've heard of it as cliffs, or I think waterfall might be the right term as well. Yeah.
Yeah, it's a watermark or waterfall, but it's when he explained it to me, it's a certain threshold that I'd have to reach to get this pay, right? So that's whatever the term is, okay? Do you as an operator want to get that? Tie yourself in for how many years? There's money out there.
And I think that's a big part of it too, right? That this isn't like a short-term commitment. It often comes with like a multi-year commitment. And for a lot of us, at least for myself, like I kind of like the freedom that I have being a real estate entrepreneur.
Yeah, exactly. I like this freedom. Let's touch upon coaching. I had about honestly over 40 people that asked for coaching. And I told you this before.
I believe it. Yeah.
People offer me $30,000, like $30,000 for 1 year. Listen, if you buy a property, you pay a commission to an agent. Sometimes it's what 2.5% or maybe up to 3% on a value of the property. It's quite they're paid handsomely, right? They're worth it. Like when you get a good property, just like a coach, right? 30,000 is not a lot considering if you're buying a $7 million property, right? But again, do I have the time? I'm pulling that time away from something else, like my family, my kids, right? Do I really want that now? I'm comfortable with what I'm doing the property management. So as you as an investor, so you have all these listeners and viewers and things like that. That's another source of income for you guys. It's not for me, okay? But for you guys, if you want to do that, people have offered me 30,000, maybe even up to 40. They never reach 40, right? But like 30,000 at 40 people. I don't know if I'll pay $30,000, but there's definitely a market there. Okay, because in the multifamily space, there's not a lot of players out there that know how to do it and can sort of walk you through it, right? But if you do have one, yeah, definitely a coach it'll definitely help. You don't run into the pitfalls or the problems that you can definitely have, and these are potential costs, right? So if you buy the wrong property, you can potentially lose more than $30,000. Okay, so
Yeah,
that's another topic
absolutely.
For coaching, but for capital raising, that sort of that core 1, 2, and 3. Take care of your investors at the beginning, your family, your friends. Then it goes to your business associates, your associates that don't really know you, but know you enough that they know what you're doing, but you have to prove it to them. Okay. And a lot of these investors, they're not going to invest all the life savings with you at the get-go. Okay. They're going to hold some back. All right. So you know that there's more money through them, okay, with them and through them as well. So that means they invested 100,000. They probably have another 2, 3, 4, 500, like probably like $1 million with them, but also they have their network as well. All right. So that's sort of my little tidbit of information. Hopefully that helps. Sort of know exactly. It's even these slideshows or whatever these returns that we shown people. It's not rocket science. My wife put that together probably an hour or two and just said, hey, okay, well, how much did it cost or what is it worth now and so on and so forth, and then get the returns. It took her an hour or two just to put that slideshow, that little deck together. We just presented to the investors, and half the investors want to get out now, right? Or more than half the investors. So
yeah, I think it's really powerful stuff. And I'm just so happy you were able to illustrate in such detail. Because again, I find way too often new investors get really excited and they get focused on how much money they're going to make off that first deal. But for all of us that stay in this game and succeed, it's actually about like consistency and being in this for the long haul. And so those first couple of deals, to me, it's more about resume building than anything else. And
That's
so
right.
I want to build my resume. I want to pad it with great stats, get some great investors who are going to become champions for me, so that then when it's time to go on to the next level, when I can start carving out bigger chunks of equity, it's going to be easier for myself to proceed and take down and continue to level up and take bigger and bigger deals on.
That's right. That's right. Your investors, your viewers might be asking, why am I doing this? Right? That's a good question. We're upgrading. Okay. We have another deal in Vaughan that we're looking at building. Okay. And I'm sure that more than half of these investors would want to invest in this bigger project. To be honest with you, the income, it wasn't a whole lot in this small, it is for most investors, it will be big. Okay. A 12 plat townhomes, 9 plus 2 or 3. It is big. It's significant. But mind you, when you hold a property, this property was built in 1920s, okay, to 2020. It's 100 years old. I've held it for 5 years. The trajectory is going up, okay? Slowly but surely it's going up. I've held it for this snapshot of 5 years. The next investor will hold it for 5, 10 years, okay, and so on and so forth. All these investors within this 100-year time frame will always take a piece off out of the property. Okay, so we upgraded ourselves. We the previous investor, the previous owner, one out of the 4, he got a nice Corvette. I heard that. Okay, whatever. To each your own, right?
Yeah.
You got a nice Corvette. For me, I take the profits out. I'm going to invest somewhere else. Okay, then I ride that wave as well. So for all you investors out there, what are you doing? Are you buying that single family home, that duplex, triplex? Are you upgrading to multifamily? It's always there's always a good project out there. Just manage your expectation, manage your investors' expectation, know how to run it, and just run it for at least 5 years. Okay. If we held it, for whatever the 20 years, another 20 years, mortgage is paid off. Okay. Once that mortgage is paid off, hey, it's cash flowing, let's say $8,000 to $10,000 a month, right? That's not bad. How much do you need to retire, Matt? I don't need a lot, right?
Yeah.
You see the clothes I wear, you see the car I drive.
We're both simple guys. It doesn't take a lot.
Yeah. So you don't need a lot. But once you hold a property, okay, you can hear the noise, right? Once you hold a property for the long term, okay, 20 years, 25 years, okay, you do very well with that cash flow. Okay. So I'm not banking on the cash flow for this property. I have my other properties that I can cash flow. But overall, it's for you viewers, for your viewers out there, if that is your strategy to hold it for the cash flow, you can do very, very well for yourself.
Yeah, I love it, Kasey. Thank you so much for sharing all this perspective. If I can ask maybe one more question before we wrap up this video. You mentioned that you guys had a 5-year plan when you got into this project. I think that's really important. And way too often I find investors that their emotions start to hijack their thinking process. And all of a sudden they get into this ego game of just wanting more units for the sake of bragging. How often are you guys planning? Like, how often are you spending times building out like what 2020 or what 2025 looks like? Like, is it once a year? Is it once a quarter? How often do you and your wife sit down and really kind of figure out what's the appropriate level of activity or what direction you guys need to go in for the next year or decade?
Yeah. So we don't look at time, like we don't look at year. What's our goal for this year? I don't think we've ever done that. At the beginning, Jed really wanted to get our units up. Like we want to buy a whole bunch of units. That's what we fell into that trap of the Hamilton properties. But for me, it's not the number of units. I think I said it to I think it was to Adam, right? And I said that I don't have a unit per se, but my goal is to maximize rent. Okay, decrease expenses, maximize rent. I'm very operational. That's my goal. Now, let's twist it in a way that what's going to determine the number of units or the projects? It's actually market driven, and what the deals are out there. So when people present you a project, okay, and you see the market out there, you have to look at that because that's going to determine your business, right? It's always go back to your fundamentals. If your business is there's a high demand, then you're going to expand, right? It's not a time, it's not a yearly, it's not a year planning. People, oh, Jan 1st, 2021, now I have to get this or I have to get that. No, it's not like that. You have to take a look at what's out there. Like, let's say if I'm in Sarnia or in London market, or I'm in Thunder Bay, okay, or in the States, what is your market going to present to you? And then how are you going to react to that? So let's just say I'm in the Detroit market. It's growing or whatever. Or maybe it's not growing. Can I take advantage of that? Let's say if I'm in Arizona, that market is on upswing or downswing. So you have to take a look at your market first. So that's number one. Our supply and demand is very, very low in supply. Demand is still very high. It hasn't changed. The COVID situation never really changed our demand and supply of our housing. Mm-hmm. We have very low supply. So what's happening right now? There's a deal out there for land. If there's a deal out there for land and I can build and I want to do affordable housing and government is giving me money, okay, in a way that I can build, I can either flip it out to a REIT or a large property landlord, property management company that I can flip it out. I can make that income there. All right. So again, stay away from that time frame. Time is not your determining factor for business. Neither is so time or units. Units is not a determining factor for what you're going to be doing. Because if your business cycle is not there, why are you gathering so many units, right? So no, go back to the fundamentals. We know, like we're in business. We went to business school. We get sidetracked on ego. We get sidetracked on, oh, I'm gonna pump my chest up because look at me, I'm a tough guy. I got 250 units. No, don't think like that. Think about, is a market there? Who's gonna buy my hamburgers? I have lineup, right? I have a lineup of people buying my Happy Meals. I'm gonna open up a McDonald's. Okay, I have people lining up to rent my units or do affordable housing. I'm gonna do this because the demand is there. Okay, so steer away from that. Get to the point of fundamentals. Now, overall, we're in an interest rate environment where it's still very low. Okay, it's not going anywhere. After this situation, I do see if things change where my business structure is changing in a way that I'm not my interest rates are going up, my carrying cost is high, I don't have the demand there. It's going to change, right? But mind you, real estate does have a cycle. I think that there will be a drop. I don't know when that will be, but always remember the Angie scenario. She's this girl that you did a video with her. She said, throw money at it or hold cash, right?
Yeah.
Very simple for business owners to lose sight of that. If there's a problem, you hold money. You have to throw that cash there, okay? Because that's going to make or break you, okay? So that the overall business structure of supply and demand is very crucial, okay? Hopefully that helps.
Yeah, that was great advice, Kasey. Really appreciate you taking the time to just break down this deal. I know the audience is absolutely going to love just seeing kind of a peek behind the curtains and diving deep into the numbers. So again, really appreciate it. Thank you so much.
No problem, man.
Thanks again to Kasey for taking this time. I know he's a very busy man. He's got a lot of demands on his time. So the fact he's willing to make some time for us on my YouTube channel means a lot. So again, thank you, Kasey, so much. And we'd love to hear from you. What questions do you have for Kasey on future videos? Jump in the comment section and hit us up with your Kasey questions. I'll make sure next time we got Kasey on the channel, we hit all of your questions. Otherwise, smash the like button if you got value. Hit the subscribe button if you're new to my channel. If you guys want more Kasey Wong, we'll throw up a playlist right here and a second playlist right here because we've got a ton of Kasey now at this point in time on my YouTube channel. Otherwise, until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, I mean, like, what's the point? Thanks, guys.